morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever, ever risk money you cannot afford to lose. So good morning. Hi, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste to you. I do these sessions Monday through Friday here at the Forex.Today YouTube channel at 7:30 a.m. New York time. If you're benefiting from these webinars, if you're enjoying these webinars, if you like these webinars, please make sure you pay it back by visiting TradersWay.com and opening up a Forex trading account today. ECNs, variable spreads, and fixed spreads, whatever you need. So, yeah, a lot of people are talking already about yen moves. Yeah, yen moves. Now, Did we assume in our macro plan that the beginning of January would have big yen strength? I mean, let's just get the facts out onto the table, right? Did we expect yen strength at the beginning of the year, yes or no? Hazabu says yes. Raymond says yes. Anybody else? Delbeer says yes, but not over like 10 minutes. True. But it's sort of, yeah, a flash crash isn't true, but these things happen. Chuck, I asked if we expected significant yen strength at the beginning of the year. Rob says a lot of chatter pointing to the Apple news. Well, first of all, Apple hasn't had a new product since Steve Jobs died, so get ready for lots of Apple disappointment, in my humble opinion, that this was a long time coming. Nobody wants to buy an old, stupid phone for $1,000. Okay, great. Also, Australia had the worst decline in home prices month over month over 20 years, 25 years, something like that. You think that has anything to do with it? You see on group someone lost 400K. Yeah, that just means they don't know what they're doing, poor gaming. It's really terrible. They should have spent $400,000 on their education. Right? And then Rob brings another one. It's China is another issue, the Chinese slowdown. Do you remember yesterday or sometime recent we talked about that they have actually 2 reports now showing contraction? Ed says doesn't matter that there's a flash crash. Yeah, I mean, I guess that's what I'm saying, but also the yen was going to gain strength, and that's how it manifested. A whole bunch of traders came back to trading, and had a reason to trade, I suppose, right? So there's a lot of other things going on that you're probably not reading in the newspaper. So that's that. Does it continue? Bearishness will probably continue until the third week of January. But you knew that a year ago, and 9 months ago, and 6 months ago, and 3 months ago. So anyways. So I hope you're benefiting from it. Okay. Thin trading as well. Well, yeah, thin trading, but you know what? That's the day most traders come back and enter their new positions. So, thin trading, maybe, yeah. So it started with Aussie yen. So like I said, really bad home data and such. Now, what's the first thing you notice on this ginormous flash crash? Is it chaos? Is it out of control? No, Rob, it's when New Zealand and Australian banks open. How'd that go, Chuck? All right, so maybe because of the lag or something, no one responded. But the question here is that with a flash crash, does this seem like complete chaos? And the answer is, look where it stopped. Monthly pivot point. New York's over by then, technically, but any New York trader that's waiting to enter an Asian trade can do it about that time. Okay. But anyways, you see that, guys? That always makes me feel good that it's just not noise. It did drop, and it hit a spot based on logic, and people, I guess in this case, got out. Yeah, well, a bank opened as a boo. That's how Asia works. They work right at the top of the hour. In fact, there's times when I've taught how to trade Asia in the past where I tell people, I give them an example where I'll say, I'm playing with my kids or something, and I look at my phone like, oh, I gotta go. And I go to my computer, and pa-chow, right at the top of the hour, you take your shot, move your stop, and then you go back out and play with your kids. But I've always said that your clock is the most important trading tool that you have in the Asian session. There's a video somewhere on the site on FX Bootcamp on how to trade Asia. It's an important tool. Oh, is that right? That's interesting, Chuck. So whether it's year or not, I'm just saying these are monthly pivots. It's something that I do use. And even in something that seems chaotic, right? I mean, that's the whole idea of chaos theory, right? At first glance, it seems like chaos, but with careful study, you realize it's not chaos. There is logic. There is a pattern in there. So that's cool. And boom, 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 boom. So do you think bears took profit here? Do you think bulls bought in? More likely, as it was falling, it was hitting buy orders. So anyways, don't freak out is what I'm saying. Do your job. What happens next? Well, the what happens next issue is whether you believe it's going to continue coming down or not. Label. No, that's not what I wanted. I mean, what am I supposed to do? This is your basic technical analysis, right? Well, that's probably not going to be helpful. If you're using moving averages, this looks really nice. And you would take the next 5A cross down, right? And you could say, well, it looks like it's coming down already, so you can cut a corner and try to set something up here. And maybe even throw on an oscillator if need be. Okay, what else could you use if you expected to head back down? Well, if you had expected to head back down, it's some form of trend. Okay. 786 retracement. Manny says it almost affected all pairs. Let me address that for a second. Okay, if this is a China growth play, okay, then what currency pairs do you think will be affected the most? AMF says the tail implies buying occurred. Yeah, well, buying from bears or buying from bulls? Well, the first one is Aussie and Kiwi for sure. Okay. Now, on top of this, does it just seem like it's yen in general? Or is it attacking a particular currency? So it seems to me that it's even more than just Asia. This is that risk-off move. It's that year-end move, or in this case, beginning of the year move. But it's all within reason what we've discussed, in my opinion. That we didn't discuss yen pairs up, we discussed yen pairs down. The general plan year after year after year is somewhere around, I don't know, the middle of December for sure. We should be moving to yen strength, and that should continue all the way to the third week of January. Well, the yen pairs gained strength on the first real trading day of the year. It doesn't seem that surprising. Yes, the velocity is surprising, but that's cool. Anyway, so this, is that Kiwi CAD? Look at Kiwi CAD. Actually, that's pretty funny. Kiwi CAD even bounced off the monthly. Pivot zone held. Some of these pivot zones held pretty well. There's that Aussie. Look at this. It's just actually kind of funny. Do you remember our trade plan here? Do you remember it? Let it break, sell the pullback. That's occurring, actually. So, Kiwi's pretty weak. Cool. So, let's take a look. I want to go back to just isolate some other things. Remember this? We were buyers at 44. It's now almost 47. Huh. No, Pharaoh, I wouldn't. That was a Kiwi CAD. That someone else asked a question about it a few weeks ago. That's how I set it up. It just so happened to come together yesterday. That's all. Juan Pablo, the moving averages. Let me give you a video instead. Maybe this won't be easier. Hang on, YouTube.
U.S. markets is driving some investors to foreign currency. Joining us.
Sorry. Oops. Okay. Watch this one. There's a series of there, and it goes through all my moving averages and my oscillators and all that kind of stuff. Cool. Yeah, okay, not a problem. It's just because for example, 2155. But if you don't understand what that means to me, then it doesn't make any sense. So I just watch the videos. I think they're like 20 minutes each. Go through it. It's a better answer than me just blurting out the moving averages. And then gold is still Oscar Mike. I think we have it going up to about here before it takes a break. So that's, I can't even see that anymore, 13.15, 13.20. Does that make sense, guys? Again, nothing's changed since yesterday. So up until about here. So oil hasn't collapsed. So that's really helpful as far as that bottom we talked about, right? Professionals talk logistics. I've never heard of it that way, Ross. That's interesting. Okay. So, under normal rules of engagement, and I don't think this is normal rules of engagement, but just if you hit the target, and that's the target, by the way, that's the projected monthly low based on December. If you hit the projected target early in the month, and I would say the third day of the month is early, very often it does work its way back. Okay. So now we have to decide to what degree do we respect or not respect the traditional rules of engagement. That's really cool, Chuck. So are we going to play that as a bottom? I mean, you can still just fib this. See, like I said, on a lot of these yen pairs, I believe the yen can strengthen another couple of weeks. So what you don't want to do is just blindly sell it Okay, so set it all up. A 4-hour 5 is a good sell zone. A 4-hour 21 is a good sell zone. Psychological levels are good sell zones. Take care, Robbie. So, like, for example, do you want to sell this on the 4-hour 5 EMA? That is a reasonable, how do you say it in English? That's a reasonable setup. You can create a trade plan around that, a reasonable strategy. So you can drop into a 5-minute, for example, and see if you can find an opportunity for bearishness, knowing that this is the 5 EMA, the 4-hour 5 EMA. Okay. So now what? Now, what if it started doing something like this? Well, it's not just a lower low, but it's held down by this huge EMA. And so that this little tiny move on a 5-minute chart, let's say that process took a half an hour. Well, I would, in that situation, not think like, should I take my 22 pips? Or will this fall for the rest of the day? Will it fall for the rest of the week? Well, I'd like to let it run. And of course, you can add to it along the way, but I'm just saying, someone that is only, like the frog in the well that only sees this much data can't decide if this is a long-term move or a short-term move. Well, I want to be the eagle in the sky. I don't know if that makes any sense. But if something like this did set up over the next half an hour, then it may last for a day, let's say, maybe a week. Of course, we don't know until it goes, right? Okay. And then staying small in there, like staying on the 5-minute chart, keeps you from too much damage. You see the 5 EMA? Amazing, right? Look what happens when you add 4 times the amount of information. What happened? I added 4 times the amount of information. We were on the 5, now we're on the 21. It used to be the 20. I changed it to 21 to make it a fib number. But check it out. There's an interesting relationship with our chart setups, isn't there? The 4-hour 5 is the 1-hour 21. What? Right? And it's also the 15-minute 55. What? Mm-hmm. I think some of these other ones will be interesting movers. I think you got to watch the Aussie. I think you got to watch the Kiwi. Now, how do you decide which one to trade? Which one you trade first, I guess? If you were going to place 3 trades, how do you decide which ones to do and which ones to not do? Hello, Brooke. Brooke, there it is. So how do you decide, guys? Do you do the Kiwi yen or do you do the Aussie yen? Ooh, a relative strength test. Thank you, Brooke. So now you can do something like no, I don't even have it on here. It's funny, I thought I did. we could add it just for fun. Okay, I'm changing all the currencies to Aussie Kiwi. So all the charts now are Aussie Kiwi. Now I got to go to, well, let's move this over, make it prettier. Move that over. 1 hour, this should be a 4 hour. This should be a 15. This should be a 5. I'm going to change the chart template to something I prefer. Cool. Okay, so now I want to save this as a profile because I'm not actually trading plus or minus Kiwi Swissy. So now I've got to go to File, Profiles, Save As, then I go to plus or minus. What is this? Aussie Kiwi. Do I put hyphens in these things? No. Cool. So now it's probably down here. Yeah, there it is. What? Huh, look at that, it didn't save properly. Whale oil B, that's really strange. I don't remember making a mistake. Well, anyways, I made this change. Huh. Did I make a mistake? Jimbo says a script will do it for you in 1 second. I don't need to do a script in the sense that that typically only takes me 1 minute. And I'm trying to teach people how to do it themselves. But yeah, that would be a cool script. Do I cook a lot, Wayne? Yeah, I think you asked me a lot. You asked me that before, Pharaoh. And the answer is yes. So anyways, that was weird that it didn't work. But anyways, so we're on this Aussie Kiwi. So one of the things we want to do is relative strength. It's hard with the chart being messed up on the gap, if you want to call it that. Which one do you think is going to be stronger in the next hour or two? Well, Guy, it's not that it's at the bottom. It's that there was no charts in the profile. Yeah, I might have to, yeah. Well, I guess we can try that. See, it didn't bring it up. Oh, I wonder if that slash I put in the name does something. Remember how I did Aussie plus slash minus? I notice here it says plus or minus. Maybe there's an issue with the slash. If I were to guess, that would have to be it. Anyways, so anyway, you could look at this and say that, for example, Aussie is actually stronger than New Zealand dollar. Yeah. Does that make sense? So if you wanted this to go down, you actually might be better off selling Kiwi yen first. Is that right, Mike? It's probably some programming thing, huh? Brooke says, I'd like to see the 4-hour close before deciding. Really? See, the way, I mean, I guess if you're being conservative, that's cool, and I can never knock that down. But sometimes what I do is I look at this and say, okay, that pivot point and that 5 EMA is going to hold. Okay, that's a strategy, right? If we're way up here, clearly that didn't work. So one strategy is I'm going to sell it off this 5 EMA because I want to be as close to that 5 EMA as possible because it diminishes my losses and increases my gains, right? So I'll say, okay, that looks like that's holding. This is going to fall off the 4-hour 5 EMA. So now I drop into a 15 or something and start looking for opportunities. So now my assumption is that we're going to stay below. Remember, this EMA, this pivot point was actually above that EMA. So the plan here is basically fib that, and I'm only risking sort of this area. But I get the whole kit and caboodle. This could fall for a week. VFD. Okay. See what I mean? So I'm only gaming the system this much. I don't know what that is, but let's say it's 30 pips, but I might be in it for 300 pips to the downside, right? So is this risk with a 5 EMA on the 4-hour, is the 30 pips worth, or is the 300 pips worth risking the 30 pips? And that's kind of the logic I get myself into. It's not always the right thing to do. Okay. Another thing to do in high volatility markets like this is you spread your trades. So you take, let's say instead of trading, let's say one standard lot, you trade 10 mini lots, but not all at once. You go pa-chow, and then the next one, pa-chow, 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 and you start adding them up, and then you can manage all the 10 individual trades individually. Sure, that's true, Brooke. Ask yourself, though, okay? I'm not disagreeing with you. Brooks has had some challenging couple of months. Okay, great. Ask yourself, though, is it trading in that situation that led to your problems? So what you need to do, truly, because I've been there before, Brooke, trust me. So, this is where I become the battle-scarred son of a gun, right? Listen to me, kid, and you'll survive. Do what you can to isolate what actually led to losses for you. Okay? Or if not losses, what made you give back your profits? Because I know you were very, very successful, right? So you had a good string of months and then you had a bad string of months. Well, that's cliche, so it happens to everybody. But what led to the good months and then what led to the bad months, right? So it's just don't like, I'm not saying this is the situation in which you should suddenly go aggressive, but don't punish yourself sort of like systemically. Like, you're not going to take any undue risk at all ever because you lost money in the past. I'd rather you focus on like what led to your good months, okay? And was it because you were swing trading when the market, I don't know, moved the way we thought it would move? And you're like, yeah, okay, well then that's good. That's not a big deal, but at least you're thinking right. And then what happened when you gave those profits back? was it because the market moved as in a way that we didn't predict? Well, then that's a risk or money management issue, right? And did you then, to add to that, did you keep buying in a falling market? And if so, what would you tell yourself now, knowing what you know now? What were the clues? What were the red flags? When, I remember oil was at I can't remember what it was, like $60 or $55 a barrel or something. And I'd spent about $10, I think it was about the third try, looking for areas of support. It kept breaking. And then finally I said, that's it. I'm not even interested. Even if it did bounce, I'm not going to buy it, right? And that was $25 ago. Why did I walk away? Well, first of all, I should have sold it, but I wasn't in that mindset. And then B, and by the way, thank you for all the subs, guys. Thank you for that. Welcome to the family. On the way down, I protected myself because there's a want to buy every bounce, but it's falling. It's a dramatically falling market, and I've never said it. I've never said that I'm a buyer in a falling market. I'm a buyer in a rising market, but I buy dips. There's a difference between a dip and a drop, right? So anyways, I've been there, Brooke, in the sense that I've gone through a bad period, and then I end up becoming over-conservative. And what happens is you miss good trades essentially because you're afraid. And I'm just trying to give you strength to say, don't focus on the fear part, because you're actually trying to get away from that. You should focus on the analytical part of your brain and figure out what went wrong, what did you learn, write it down, document what you'll do next time, and focus on getting in good trades. It's much more important. Okay? It'll save you. Daniel says I got in on that mini yen crash. Cool. Did you cash out? Can you explain the dips? How do you purchase the dips? Okay, well, a dip is an uptrend play, right? So let's say this is an uptrend, a series of higher highs and higher lows. In this case, I'm a buyer in an uptrend. Okay, and if you watch the YouTube video link I shared earlier, is it still in my? Yeah, if you watch these series of videos, it'll explain how I use moving averages and oscillators and stuff to measure this. First of all, to ask myself a basic question like, is the market going up? Is the market going down? Is it going sideways? Well, in this case, if it's going up, then I say, okay, I want to be a bull because I'm essentially a trend trader. And ideally a macro trend trader, meaning based on fundamentals, right, Ross? Fundamentals first. And then the second thing is, if I'm a bull, should I buy high or should I buy low? Jimbo, I see your comment there. Is Brooke is being disciplined? Yeah, I appreciate that. But sometimes we can mask discipline with fear, or we can mask fear with discipline. And Brooke's been around enough, Jimbo, where as sort of I think Brooke's probably a fantastic trader, and it's humbling to go through a stretch like that. And it's easy to say it's Brooke's, let's say, piss poor trading or something, right? And there's a fear attached with that, but I don't think that's what happened. No, maybe it was. Maybe Brooke just went crazy, but I don't think so. So therefore, I'm simply saying, don't talk yourself out of good trades because of the fear of losing. No professional trader has a fear of losing. So in that case, if you went through a stretch of bad trading and bad results, focus on the analytical mind, not on the emotional mind. Go find out what went wrong, analyze it, document it, write a future trade plan to yourself. That's all intellectual. Okay, and then your emotional mind will buy into that and say, okay, there's no reason to be fearful because A, I did learn something from it, and B, I'll be prepared for it next time, versus I'm not going to take a 4-hour 5 EMA because I'm afraid. There's a difference. That's all I'm saying, okay? But you're also right, Jimbo. Okay. So going back to this, yes, I don't want to buy high as a bull. I want to buy low. So these are dips. So you want to base your career buying these blue circles, okay? And that's where like Fibonacci comes in. This is where moving averages come in. This is where oscillators come in. This is where price action comes in, okay? It's all of that. You can use all those styles, one of those styles, but you're going to have to do something. But your career should be based on this. Now, what I think happened with Brooke, and again, I don't know, but I think Brooke did well in a market like this. Brooke did exactly what a trader should do. Everything went good, making money, everybody's happy. And then instead of a higher high, it did this, and Brooke kept buying and got caught on an old trade plan, but didn't update it with reality. And that's happened 1,000 million times. Okay, and the thing is to get better at recognizing when things change. And do what I did, like back on oil. Like I guess we'd have to go all the way back to oil, but there was a time a long time ago where I admitted to you guys, like I'm a bull in a bearish market and I have to stop. I'm not selling it because my mind is set on bullishness, because I believe in macroeconomics and all this kind of stuff. Well, there's something bigger going on, and I have to be, strong enough to admit that I don't know what that is. And I think it was way back in, I don't think it was even December. I think it was way back here. I think it was like in here. So maybe let's add some pivots again. Indicator list. Which one is it? 1 week, no. 1 month. See if I can reverse engineer this. If I were me, where would I get out? Yeah, right in here. All right, so this is the area where, as a bull, this just has to hold, and it held for weeks and then broke below. Okay, and that's where I'm like, that's it. I'm not interested anymore. I'm taking a walk. But actually, something tells me it was this one. You know what? It was this one. You know what? It was this one. It wasn't that one. I was out in here. I think it was this one. But either way, you have to have a line in the sand. Do you remember I said this is a line in the sand and, not one like Obama's line in the sand? Because I every time I draw a line in the sand, I always think of the one in Syria. That's my Benghazi! But anyways, there was a time where you just have to say, so let me back up. Yeah, see, I could see wanting to buy this. Then you want to play the double bottom. Yeah, see, I'm totally convinced it's this one. Okay, it has to bounce. It's a monthly M2. It's a double bottom. It just has to go up. Okay, this is walk away. So I'm still a bull on oil. Let me remind you, right? Down here, I'm talking about buying oil. I was talking about buying oil here, and I was talking about buying oil here, and I was talking about buying oil here, and I was talking about buying oil here. And then I said, I'm walking away. That's it. I'm not in the market. There's a lesson in there, and it might be something to go back to Brooke. Okay. And then, of course, what I need for me to enter this market is a double bottom, higher high, higher low, and I'll buy here with the anticipation of a new uptrend. Okay. Anyways. ADP, another dumb prediction, 271. Huh. Daniel says he doesn't use indicators. That's cool, Daniel. I have no problem with that. So this is what I believe you need, Daniel. Naked. Where's my naked? Currency predicted blank. Naked. Default pivots, fibbits. Naked. No, that's not what I need. Naked with pivots is what I want. Where would I see it? Naked chart. That's the one we're in. Give me a scan. What did I call it? Naked charts with pivots. Got it. All right. So this is all I need, Daniel. And if I were to if I were to work with you, Daniel, if it was you and me, this is all we would really need. And I would try to fold this other information into your trading style. It's not necessary, but it's extreme. Well, for me, I believe it's necessary. You could probably argue with me and say you don't need it. That's cool. But that's what I would teach you. I'd add this information at a bare minimum. Do you need moving averages? No. Do you need oscillators? No. Do you need blah, 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 blah? No. We have a quick about American economic data. This is bad, but oh, why is there a revision? Okay, yeah, that makes sense. Okay, so like non-farm payrolls is tomorrow, right? NFP is tomorrow, for example, and they use I think it's 20,000 households, right? They call 20,000 households. They call them, and they survey them, and they call them the 20,000 households are all from all around the United States. So it's like they call 500 people in California, but California is a big state, right? You know what I mean? So they call all over the country and they interview. This is called the household survey. Okay? But then they also interview a whole bunch of businesses. Let's say it's 20,000. I don't remember the number. So they go and they look at payroll stubs, literally the payroll stubs, right? And they don't know if, when they look at a payroll stub, they know somebody got paid for a job, but they don't know if that person has 5 jobs. Okay? When they call the household, they say, are you working? That kind of stuff. But anyways, and this is called the establishment survey. It's a good setup, right? In the sense that they're surveying households and they're surveying businesses. And they take this, but it's only 20,000 businesses and it's only 20,000 people, an economy of 360 million people. It's not a lot, right? So then they take this number and they go, blah, 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 right, with their fuzzy logic, and they say 282. And you're like, what? How'd you come up with that number? Shh. A pretty girl like you shouldn't be asking such big boy questions. But they somehow come up with some number. Okay? Now, in this case, do you think the government employees worked on January 1st? No. What about January 2nd? How much work got done? They haven't seen each other for a week and a half, so they have to go for lattes and bagels, right? And fatten up. So what is it today? Is today the 3rd? Yeah, so today is 3rd. And then tomorrow's the report. So how much time do they have to come up with their number tomorrow, Brooke. By the way, guys, thank you for all the subscriptions and stuff. I appreciate that. Lots of people today. Thank you. Okay. So they've basically had 1 day to pull this number, maybe a day, day and a half, right? So then over the course of January, they continue doing their numbers. Blah, 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 household, blah, 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 blah. And now all of a sudden it's February 1st, Feb 2nd, right? And at some point, I don't know what it is, February 5th or something, right? Thank you. I'm a legend. Thank you for that. I appreciate that. I'm an only child, so I'll take compliments all day long. I appreciate that. Thank you. So some point you get to next NFP. Let's say, I'll make it up. It's February 4th, okay? And NFP comes out. How many days have they had to do NFP for the January number? Well, again, they've had 3 days, maybe, right? If there's a weekend in there, it really throws things off. But they've been working all month long updating the December number to get a better number. You understand that? That they're getting a larger data set over the course of January and then running the stats again, and they're getting a more reliable number because they didn't have 1.5 days to crunch out a survey. They've now had the whole entire month. So in February, they're releasing the Jan number. The headline number is the Jan number, but they also do the revision going back to Dece. Okay? And that's why, Brooke, because they're throwing out the headline number quickly, and then they're actually crunching the data over an entire month to get a better number on the revision. So you could probably make a career only trading the revision. As a boom, you have to go to either fxstreet.com or the FX Street YouTube channel. But I don't know, it's FX Street, so I'm just a guest. So yeah, if anybody doesn't know about what we're talking about, on Friday I'm doing the webinar at FX Street. And just in case you didn't know, I've been doing the webinar for 13.5 years. To give you a perspective on that, webinars have been around for 13.5 years. Oh, you're referring to the tip on the end trade? Oh, well, cool. Are you going to buy me wine or cigars? And those are like, wait, whoa, whoa, whoa. I don't want to thank you that much. Every day, Daniel, except tomorrow I'm at FX Street. But I do these webinars Monday, Tuesdays, Wednesdays, Thursdays, and Fridays, 7:30 in the morning, New York time, at the Forex.Today website. And I'm with tradersway.com. So again, if you guys are enjoying these webinars, please pay it back by becoming a client at Traders Way. See, I wanted to try what was the link? I told you guys I hooked it up to this thing. Hang on, I think I can do it over here. I did this yesterday, didn't I? This one? Modules. I hooked it up. Oh, there, hang on. You can send a tip through the software, I'm not fishing for $5. It's just somebody mentioned something the other day that they wanted to buy a cigar, and I found a way through this software. And so if you do send me money to buy a cigar or a bottle of wine, it'll actually pop up in the webinar and it'll say, pa-ching, Rob gave Wayne a tip for, $25 or something, whatever. It says something. But anyways, so that's how you can do it. Kira, why don't you ask me, Kira? Can anyone tell me what strategy? So this was going back. I'm showing a naked chart here, going back to. Oh, I forgot his name. Sorry. Somebody said, I forgot. Ricardo? No. Daniel. Daniel said he doesn't like indicators. He tries to, prefers to trade without indicators. And I'm like, that's cool, Daniel. Add some pivot points on top of that because they're a leading indicator. So Daniel might say, don't like to trade indicators because maybe most of them are lagging. Like, why would you? Put it this way. It's kind of like at some point you're like, I like to drive a car, but I don't like to wear a seatbelt. I don't like to use my turn signals. The headlights are a fad. At some point you probably should be using your headlights. That kind of stuff. So you don't want to strip this down too far. And in this case, the only thing I use on a chart like this are leading indicators. There's price action, right? And there's pivot points, both being leading indicators. The question here is, will the government shutdown affect the dollar? Okay, what affects the dollar? People are either buying U.S. treasuries, foreigners are buying U.S. treasuries, right? Because they're afraid of investing in their own country for whatever reason. There's a million different reasons. So they'd rather park their money in the U.S. Treasury because that's not even a decent investment, right? It pays something, but it doesn't pay a lot. So they're not trusting their own banking system, let's say. And they say, okay, I got $1 billion, but I have nowhere to deploy it. The economy is bad. So I'm just going to wait things out. I'm going to buy a 10-year T-note in the United States. And that money comes to the United States. They convert their $1 billion from whatever local currency to US dollar. That means they're demanding US dollars, and the US dollar goes up in value. Now, at some point, they're sitting back home, and they're like, you know what? Things are starting to look good. I see a deal. I have a deal on the table. I need my $1 billion back. Now what they do is they sell their treasury, and they bring their money home in which they're selling the dollar and converting it back to the local currency, right? And then that's the process of which the value of the dollar is changing, is changing. So is the government shut down what? Making foreigners buy treasuries? But, I don't think that makes a foreigner want to buy U.S. treasuries, nor does it really make them want to take it out. So I'd say like the real simple answer is no, I don't think it should. But we could discuss if you had a theory, right? Hey, Kara, when you type in caps, it means you're yelling, just to let you know. Oh, you want to purchase a new laptop or iPad? Well, don't buy an iPad to start trading. Okay, you need a Windows machine. Okay. So I'm on a laptop now. Hang on. I'm on a laptop now. And this is running multiple screens. And I have another one here. I just don't have it hooked up. So my laptop is just a Windows machine. I think it may be 12 gigs of memory, probably not even that. And then I run that triple screen. And the thing is, you notice there's only an HDMI cable. Oh, where are you? Okay, there's only an HDMI cable. You notice one thing? There's no power plug. So the reason this is laying on my desk is I go to like Starbucks and I pull my laptop up and then I reach down in my bag and I pull out a screen and I go plop, right? And then I pull out another screen, plop. And now I'm sitting there and I have 3 screens. And my laptop's not even plugged in because it's, so all 3 are running off battery. And people are like, oh my God! Look at that guy with the 3 screens! Like a boss. Boom, yeah. So I do 3 screens. Like, what's the big deal? Those screens, now, these are lower resolution. So they're not 1080. They're 786 or something. But they're $94 or something. So you could probably buy a computer for, let's say, $500 or less. And then buy those 2 external USB powered portable screens, $200. So let's say for less than $750, you can get a triple screen rig that's portable. Yeah, Jimbo, but the chicks dig it. They're like, who's that? I say, sorry, baby. I'm doing secret consulting work for the Israeli army. I can't talk about it right now. Well, the problem with the Apple laptop part is the Apple laptop part. I've never traded MT4 with an Apple laptop, but a lot of people bitch and complain about it. Do you do a lot of trading at Starbucks? Yeah, even on airplanes. One of my favorite stories is I was waiting to be interviewed by Bloomberg Television, and it was the documentary. I was the only guy to do it 2 years in a row, which was wonderful, I suppose. So anyways, I'm waiting, and I get there on time, and the production crew is late. They're backed up, of course. So the producer comes out. She's like, hey, man, I'm really sorry. We're about 20 minutes behind. Do you mind just waiting? Not a problem. So anyways, 20 minutes goes by, maybe even a half an hour. Producer finally comes out, and she's like, okay, we're ready for you now. And then she's like, what are you doing? And I got my laptop up, and I'm like, oh, I'm trading. She's like, you're trading, like, now? Here? While you're waiting? I'm like, yeah. Tell me all about it, right? What are you doing? Show it to me. I'm like, oh, well, you see this? You see that? So, yeah, man. Another story I have, which I think Daniel reminded me of it when I was visiting him in Hong Kong. A couple of years earlier, I'm in Shenzhen, and I'm at I think it was the Ritz-Carlton there, and I'm down and they have like a jazz bar and they sell cigars and all that kind of stuff. So I'm like the lonely businessman in China. And I'm sitting there, I'm like, you know what? I want a Cuban cigar. So I go into the bar because I can't buy Cuban cigars in the United States. So I go down in the beautiful walk-in humidor, and I'm like, these are all Dominican. He's like, yeah, I know. Ritz-Carlton is an American company, and they won't sell Cuban cigars. Right? What? Yeah, that's probably it. UK Kenny, I'll let you show that. So anyways, so there I am in China with my Dominican cigar, and I'm having a cocktail, and I'm talking, and I'm trading Forex on my phone. He's like, "Are you trading?" Like he's like, "What are you doing?" I'm like, "Oh, I'm trading the foreign exchange market." He's like, "Really?" I'm like, "Yeah, it's fantastic. Let me show you how to do it." So he's sitting next to me, and I'm teaching him how to trade on my screen. And he goes away for like 20 minutes, and he comes back, and he's like, how's it going? You make any money? And I'm like, I don't know, let me check. Yeah, I made like $1,000. He's like, you made $1,000? Like, since I gave you your drink? I'm like, yeah. Markets are just opening up. Which is probably like 6 months' salary. I don't know. But anyways, he was dumbfounded. He's just like, really? So he kept circling back like every 4 minutes. Now how much? Now how much? So yeah, you gotta have a portable laptop, portable machine, sure. Yeah, UK, Kenny. Yeah, I think we'll have a good time. I need to get back to Hong Kong. Guangzhou's nice too, but Hong Kong is Hong Kong, right? Yeah, Daniel and I were in Guangzhou, sitting on the Pearl River, having awesome seafood. But how about I'll meet you in Macau? Yeah, Pharaoh. Another story of mine, I got a lot of these stories because I've been doing this so long, but I had another one where I'm eating dinner at the Waldorf Astoria in New York City at the Bull and Bear restaurant where I used to hang out. And I'm having my drink and everything and talking to all the local boys. And then I'm like, hey, I got to go upstairs. The Aussie's about to move and it's going to freak everybody out. Do you want me to cash out? Or should I just come back down in like an hour? I'm like, what do you mean? I'm like, oh, well, the Aussie jobs report's going to come out, and there's going to be a huge surprise. There's a big revision coming. Nobody knows about it. So I'm going to go up there. I'm going to trade it, and then I'll just be like right back. And they're like, oh, okay. So I go up, and I get to the room, and I think I traded it live with FX Bootcamp people. So I log in. I'm in this beautiful penthouse and stuff. It's just awesome, right? And so I go up there, and everyone gathers around, and the numbers come out, huge surprise, big revision, ciao. But one thing about Aussie is I know for whatever reason, Aussie never runs. It gives you the spread, so you make your 80 or 100 pips or whatever, and then it collapses on you. So anyways, boom, I pick up like 110 pips or something, pay for the whole weekend, pay for the penthouse at the Waldorf Astoria, paid for the wine, the cigars, the steak, and I'm like, okay, out. And I head back downstairs. And I walk back into the bar, and they're like, so how'd it go? I'm like, yeah, big revision, freaked everybody else. The market jumped, popped it, made my money, and I'm back. And they're like, oh, good. And they pour me a drink. And it's just like Forex. But I'm telling you, now I know I'm way off sidetrack, but everyone I meet is just fascinated by what Forex is and about what I do and what we do indirectly, right? And so it's really cool. I mean, that's another reason to fight for it. Everyone knows that this is cool, right? Everybody knows that this is cool. So, work hard for it. Like, don't let it slip, right? Runt's is awesome name for a restaurant. Well, it's actually where like JP Morgan and all the Wall Street billionaires over history gathered. So a good friend of mine, an old FX boot camper, knew the place because he knew all of New York City. He's a local boy. And he's like, oh, I got to take you to the Bull and Bear. And so we go to the Bull and Bear. I'm like, oh, this is cool. This is what I want. I want a non-fancy, non-foo-foo place in New York City where I can get an amazing steak, have fabulous whiskey, have old school service, right? And then hang out with the ghost of JP Morgan and such, right? And so anyways, I developed a friendship with the lead bartender there because I figured this guy knows everyone in New York City. So every time I showed up, I'd bring him a cigar because I go to Nat Sherman's down the street. So I bring him a cigar from Nat Sherman's just as a gift, like, hey, man. And then inevitably, after a while, I started showing up. I live in Atlanta. I don't live in New York City. I'd walk into the Bull and Bear, and they're like, hey, and they kick a tourist out of the chair, and they're like, clean the bar for me. And they're like, hey, have a seat. And so I sit down, and the bartender's turned around, and he comes back, 18-year-old McCullen. I haven't even ordered anything yet. And then McCullen never made it to my bill ever. So it's just really cool. And that was a nice place. And then it's been shut down for years now. So we'll see how that goes. No, I'm not a Jack Daniels guy. I'm not against it, but that's, I'm not a snob in that way. But no, that's not what I drink. Probably with Coke, Jack and Coke. All right. So, anyways, getting back to this, what do you want to do? Are you going to try to reshort it? Pick your lines. That's all. And what time is it? Yeah, we go. Yeah. Oh, thank you for subscribing again. Or again, thank you for subscribing. No, well, it's a type of whiskey, but it's more of a bourbon. I believe it's corn, right? So it's going to be a bourbon. Yeah, Jack and Ginger. Yeah, which it tastes good. It's just not I wouldn't call that a high-end drink. That's all. I drink like bourbon and ginger at times. Hey, binary option, how you doing? Tennessee sour mash, yeah. Well, not many people know this, but in the United States, I don't care where you go, pick your brand. They'll say, oh, it's a single batch, limited batch, rare reserve, this barrel, that barrel, age this long, age that long. It comes from the waters of the Blue Ridge Mountains. It comes from Tennessee. Oh, no, we made this in Brooklyn. You go through all of this stuff. Something about 60% of all whiskey, whatever you want to call it, Tennessee whiskey, Kentucky bourbon, whatever you want to call it, 60% of it comes from one company, and it's like in Indiana or something. And almost the majority of whiskey and bourbon in the United States, no matter what label and no matter how exclusive it is, 60% of it is not something that they actually distilled themselves. What they did is they bought it from someone else that made it and aged it for as long as they said it was aged. And then they brand it. They pour it into a bottle, put a label on it, and then wrap a story around it and sell it to you. And since Jack Daniels wouldn't do that, they'd make their own. And Jack Daniels is probably the other 40% of the market. Then virtually every whiskey you've ever bought with a foo-foo story behind it is probably not foo-foo. Hey, Rohit. So anyways, let's go back to this. If you are a seller, like I said, pick your lines, wait for it on a smaller time frame. I'd have a closer look at these things and then keep a stop close because, I wouldn't be certain it's going to fall, but I certainly would hope it would want to fall again. Yeah, Ed, that's why you buy Scotch. Yeah, sure. Roger says Kentucky bourbon's not even drink. You know what? There's a lot of bourbon I think is actually quite good. But remember, bourbon is filtered. So even the cheapest bourbon, I think, is quite drinkable, especially if you're going to mix it with something. But even just straight, even the worst is not horrific because, by definition, being bourbon, it's been filtered 2, 3, 4 times through charcoal. You could have a bad Scotch and know it from across the room. I was once thrown out of a bar because I ordered Black Label, Johnny Walker Black Label, which isn't the world's greatest either, but he poured me a red. And so I go back and I'm like, hey, I ordered a black label. And he's like, yeah, I gave you a black label. I'm like, no, this is a red label. He's like, no, it's not. And I take another smell. I'm like, yeah, that's red label. He's like, how can you tell? I'm like, they're not even same. Like, this is garbage. This is red label. He's like, I did not. Are you calling me a liar? I'm like, yes, I'm totally calling you a liar. Like, look, it's red label. Like, I don't even have to sip it. It's red. Anyways, one thing leads to another, and I'm on my ass out on the sidewalk in the front. But I was right. So, but anyways. Okay, anyways. So I'd pick my line there. So we went through a lot of these. They're all there. So I'm not sure how much you want or need in the coverage. Let me go back to this. Pivots yet. Yeah, that's what I'm saying, AMFX. Like, there's no doubt. Like, I was right. So who knows? Maybe he poured me a bottle, a black label, in which the owner at night pours red label into it. I don't know. But that was even when I was a young man, not a fine connoisseur, of fine things. But anyways, so let's go back to this Kiwi CAD. It's actually moving. Do you remember this one from the beginning of the webinar? Where I drew it like this, and like this? And I'll have to remind you, this was the trade plan from, I think it was a week ago. I think we had it like this a week ago. Right? And so there's the break. Let me do it in a different color now. We'll do blue. So here's the break. There's the pullback. And now we're ciao. And that's just happened just even during our webinar. Gorgeous. Look at that. And right off the pivot, gorgeous. So Kiwi's weak, as we know. So we already did the relative strength. I don't know if you logged in late. We already did a relative strength exercise. Kiwi was a really weak currency. And we decided if the yen started gaining strength, we'd probably sell Kiwi first. And so we're looking for a setup on a smaller time frame. And this may be the double top, right? So have you guys set this up yet as a trade? Right? This is plan A. This is plan B. Okay, the plan A, sell the double top off the pivot. 2, sell the lower high after the lower low. So this is plan A, sell here. This is plan B, sell there. If you're going to sell this. Now, of course, you don't have to. Arisa Bubba? Cool. How interesting, Brooke. Binary Option says, Mr. Wayne, I heard you were saying that you're going to smash your screens. Can you send them to someone in need of... You know, I thought about that, so I'm going to donate it to charity. So I already found the group. They'll even come pick it up, all that kind of stuff. So it's fine. Yeah, I haven't decided on that, Pharaoh, if we're going to do a book or something. Yeah, Jim, your MT4 app is simply an app. You're not going to get, like, you can't put pivot points and stuff on it. So I wouldn't, it's a 15 minutes. See, M15, NZD, JPY. So that's a 15 minute. And when I change it to an hour, you should see 1H or H1. Okay. So anyways, going back to whoever said it, okay, your broker gave you MT4 on your phone. Okay, so what? You wouldn't make that your trading platform. So if you could, please visit tradersway.com so we can give you a proper trading setup. Remember, not only do you get MT4, but you can download all my chart templates, all my profiles, all my indicators. They're all given to you totally for free. The descriptions in the link, the download link is in the description below the video. Just pay it back by opening an account at Traders Way, okay? Don't be rude. Make sure you open up the account. Do I think BOJ will intervene? No. Okay. Did you notice that nothing happened to the 10-year T-note? I think that's interesting too. Okay, so look at all these lines. 4-hour 21s tend to be all right. Look at roll reversals. Look at fib retracements. Just be careful because at the end of the day, we don't have your typical technical analysis. So I wouldn't fit this in and say this is going to trade just like every other trade we typically make on a typical day. I always put like a level of skepticism in here where, you know, it's just not usual. The other thing is the usual, like I mentioned earlier in the webinar, if you hit this target early in the month, the usual rules of engagement is by the end of the month, you're up here. Okay? So, you know, and lastly, where I started with this whole thing is this is typically the sell zone, way up here. So there's a lot going on yet, right? So kind of wait for it to set up, let it do its thing. Okay, and remember the differences. Like if this falls here, and it looks like it's challenging, if not breaking it, but give it some time here. But if it falls here, it'll fall for the rest of the day, maybe the rest of the week, maybe the rest of the month. Okay? However, if it rises up here, it's going to double bottom. Minor difference, significant outcome, right? So anyways, I would look at this 4-hour 21 like we did on some of the other pairs. Imagine this 4-hour coming down over time. Actually, let me redo this and try to match the colors. Aha! Ha ha! Match the colors. All right. Imagine this 4-hour 21. It's going to move down and to the, down and to the right in the future, right? And your job now is to sell off the future 21. So that's why I'm saying this blue area is probably where it's going to drop. Does that make sense? So now going into a 15-minute chart, it's the other one, not this one. Let me delete this. See? Up here. So this 21 is moving to the right and it's moving down. It's moving to the right and it's moving down. Shoot. Whatever. Okay. So I do want to travel this year. So if you guys want to do a get together, but you know what? I'm saying that now. I don't have time this year. I have school starting up. I'm getting my first degree in May. Then I have to move to Cambridge again in June. Then I have to spend from June to July. So therefore in August I have to spend time with my family. And then September, October, that's yen season plus back to graduate school. Yeah, I don't even have time in 2019. Maybe late in 2019 I could take some time off in the middle of fall semester, meet up somewhere with you guys. Jim, you got them? Cool. Yeah, it's amazing how that little move is 80 pips, right? Well, it can still be part of your trade plan. Okay, if you're trading them up, okay, you can still do like, let's see, it would go up, 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 let's say down, 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 right? Then up, 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 and then down, 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 and then up, 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 up here. And then you would look, let me do it to the left now. You'd look for this like up, I have it marked here, but then you'd look for this way. Okay, remember it's only a 1 minute chart, and this way could be down for days, and this one just would be up for 2 days, something like that, if that makes sense. And that's just multiple time frames. All right, so I didn't hear a ping, so I don't think anyone bought me a cigar. That's all right, though. I just wanted to see if that system worked. Come to Croatia. Croatia's nice. You know what? I don't know, Jonathan. That's not something I do. Give them a call or contact them through chat. Yeah, I've been to South Africa. South Africa's nice. All right, how do you choose? All right, great question. So I start, when I'm doing my analysis, I typically start on a 4-hour chart. You can do daily, but it generally doesn't add a heck of a lot more value. I mean, you can see a lot on the 4-hour. I don't go typically farther than that unless I need to. So anyway, so I look at this, and we know that the Aussie yen's been down for weeks. So that's why I don't need to go to the daily chart. Oops. We know for weeks that it's been a downtrend. Okay, great. So now I go to the 4-hour chart. And I create a strategy here. Thank you, Nam. So I create a strategy here. I decide whether I want to buy or where I want to, if I want to buy or if I want to sell. Another way of saying that is this an uptrend or is this a downtrend? So if you watch those videos on how I use moving averages, I look at this and by definition it's bearish. So therefore, by definition, I want to sell a lower high. I'm going to use price action for that. I'm going to use moving averages for that. So I look at this, I pick my zone, I pick my strategy, I'm done. Takes me 2 seconds, maybe less. Okay? So I know the price I want to trade, and I know whether I want to buy or sell. So in this case, I want to sell in that blue zone. Next, boom. So I can choose the 15-minute chart, I can choose a 5-minute chart, but now I'm not trading strategically. I'm using pure tactics, okay? And that's typically a price action EMA type strategy once again. Oscillators are great in this situation. But I'm not deciding what to do. I know what I want to do and I know the price. Okay? So my book, which was published 10 years ago, which I must have written 11 or 12 years ago, is called Strategic and Tactical Forex Trading. So I start with the strategy. I say, this market's bearish. I want to be a bear too. I want to sell. Where do I want to sell? I want to sell it there off the future 21, off a roll reversal. Okay, done. Midpoint cycle level, done, right? Done. There's the strategy. Then I drop into this, and now I'm kicking down doors and trading, right? This is boots on the ground tactics. Okay, so I can trade this up into here, and then I can drop it like it's hot. Or I can just let it rise, and then I can look to sell. But, right? So hopefully you guys hang with me tomorrow at Non-Farm Payrolls. It's a 3-hour webinar. I don't even know where that is, Pharaoh. Anyways, Alicia, is that it? Alicia? Does that answer your question? No, and it's not a good time to be trading. Juan, the best thing to do, in my opinion, and I've been teaching this for forever, somewhere between 0 and 5%. Okay, Juan? If you're making more than 5% a month, the beta must match your alpha. And there must be a good reason. So like if you nailed this move and you got extra lucky on the ends, but let me say it again. A year ago, 9 months ago, 6 months ago, 3 months ago, 6 weeks ago, 3 weeks ago, we were talking about the yens moving the first week of January. And specifically, yen pairs falling. Specifically. Yen strength. So the fact that the first trading day of the year, all the yen pairs dropped, and they're calling it a flash crash, this unpredictable move, the first week of January, oh my God, all the yen pairs are, what was it? Oh, it was this, and it was for that reason, and it was this reason. Dude, we knew this was going to happen and could casually talk about it. So now, if you suddenly happen to be on a lot of yen pairs and made a lot of money yesterday, great. At least you have beta now that will allow you to make more money. So if you made 10% in December, but the market only moved 2% or 3%, the question a professional investor will have is, Well, if the market only moved 2 or 3%, how could you possibly make 10? And usually, well, the only way to do it is through leverage. And your risk-adjusted performance is not going to be good. So you're going to be really happy. You're going to tell people, look at this. I made 10%. And a professional investor with a lot of money is going to look at it and say, wow, you were over leveraged. And they're not going to be interested because that's just risk. They don't want more risk in their life. They want you to manage their money, but they don't want the risk. And you're trading with a high level of risk. So no professional will want to do that. But if they looked at the results and in January you made 10%, but there was a huge move in yens, they'll say, well, oh. And then they look at your trading and you made a huge profit on yens because for some reason you shorted all yen pairs and the next day all yen pairs fell. And they'll say, oh man, you totally nailed that. You're like, yeah, it's part of my seasonality plan that I can take you through year after year after year after year. And they'll say, oh, that's good. I'm like, yeah, that's great. Jimbo said that move was Jimbo, yes and no. Like, what do you want me to say? If a year ago we talked about, let's just go back 2 years ago, Jimbo. This time of year, go back. I think it was 2016, was it? In the first week of January, the Dow Jones Industrial Average dropped 10% in like 3 days. So, that was just 2 years ago. So let's say 2 out of the last 3 had high volatility. So, yes and no. Yeah, that's a big move. I can't predict velocity. I can predict velocity. I can't predict what's the better word? Not velocity. I guess it's velocity. I can't predict the velocity, but because that means I'd have to know what other people are doing and all that kind of stuff. And there was a confluence of other things too. Like it was going to happen. How about this? It was going to happen anyways. When those banks were opening, the yens were going to move anyways. Then Australia had horrific real estate data. Okay? The biggest decline in housing prices in like month over month in like 25 years. Something like that. Terrible, right? China confirmed multiple ways they're actually in contraction. It's not like they're slowing down. Their economy is getting smaller. The rate of increase isn't slowing. They're actually getting smaller. So that's another bad thing. And then the Apple thing. So a lot of things, perfect storm, all came together. But it was going to happen. That's what I'm trying to say, right, Jimbo? Right? You see what I mean? It was something big was going to happen, Jimbo. Let's say instead of a 6% move, it was going to be a 2% move. And okay, but a lot of things together, kick-fired a lot of things, but also another way of doing it. Like think of it this way. There's so many ways of breaking this down. There's a lot of people that got out of these trades in December because they needed to get out for tax reasons, right? And then a lot of people want to get out anyways in January, once again for tax reasons, depending on your tax situation. But if you took profit in December, you pay taxes this April. If you took profit in January, you pay taxes not this April, next April. So 16 months from now, not 4 months from now. So that's important, right? But also a lot of people may have moved stops and all that kind of stuff. And typically they move it within, let's say, 500 pips. Well, they dropped 600 pips. So a lot of things were hit. A lot of things came together. Okay? But if if I were me, okay, Jimbo, I would tell myself the story isn't that there was a flash crash. Because what that says inherently is that it was unpredictable. Okay? Jim, you're going to have to go to FX Street and register. FXStreet.com. Okay? A flash crash says unpredictable. And I don't actually think it's a flash crash. I think that's, once again, media describing something. Okay? This wasn't like circuit breakers and all this kind of stuff. I've seen flash crashes back when they first started happening, and they were bizarro. This was a big move. This was an unusual move, granted. But it was actually expected. The velocity to it, no, but things just came together and created this. But it wasn't an out-of-control flash crash. It happened in a very boring, seasonal way. We talk about it every year. We trade it every year. I prepare you every year. You were probably on those yen shorts. You probably made money. It's not that I'm a genius. It's not that you're a genius. And it did move incredibly fast. And if anything, you probably didn't even get out because it was beyond what the plan was. But don't tell yourself it was an unpredictable move that will not happen again. It's going to happen every year. It's like clockwork. It's seasonality, guys. And if you missed it this year, like some people missed it last year, write it down so you don't miss it next year. I think the only way I'm off this year was the move happened 2 weeks earlier than I typically see it. But it's not, again, incredibly unusual. A big move in January is pretty reasonable. And like I said, go back just a couple of years ago, there was a 10% decline in the stock market in the first and second week of January, and then there was a rally in the third week. And they made the 10% back. They lost it in 2 weeks and made it back in 2 weeks. Right? So also the month opened at M2, so the rule rate. We talked about shorting the 4-hour 21, right? So Jimbo, you're right. If they open at M2, that's where you look to buy. But the seasonality, see, once again, fundamentals overrule technicals. You see what I mean? So even though they opened, if you were a bull and you had to, that's still a technical place to buy. But we were expecting yen strength. Let me remind you, we're expecting yen strength to the third week of January. Then there's going to be a false rally in yen pairs to the upside. It could be 4 days. It could be 14 days. But then the yen is going to strengthen again down into the end of March. And then it's going to sort of move sideways and up and down around April. Then there'll probably be a rally in May and then a drop going into the June meeting. And then the Fed will probably raise in June and then maybe give us outlook that now they'll probably tell us there's nothing in SEP, but maybe DECE, but it's data dependent. So then we'll get through summer. We'll rally through the first half of the fall, not get the rate hike in September, which creates the rally all the way into Thanksgiving. And then we got to start getting worried about the December Fed meeting, which if there is still growth, they'll probably need to raise one more time. They'll cautiously raise this time, but they'll raise because even, like I said, and I've done this 3 or 4 times lately, but, even if we're at neutral zone now, neutral being nil, right, where in little I equals big I, the interest rate equals inflation, right? But if the economy grows, it was growing at 3%. So let's say over the course of a year, it slows down to 2.4, and then it slows down to 2.1, okay, quarter over quarter over quarter. Well, that still means the economy is growing. Now, the rate in which it's growing is slowing down, but it's still getting bigger, which means by the end of the year, inflation will be higher than the interest rate. So to keep them equal, which is the stated policy of the Fed, they've told us they want it to be neutral. So if inflation creeps up even only a couple of, well, then they're going to have to raise the interest rate too. And so that's going to be a June, and that's going to be a Dece rate hike from the Fed. So down, sideways, up, and then downish again, going into Dece and January. I just went through all of 2019 like that. Okay? And the thing is, you probably think I'm just throwing it out there, but if you studied it hard, you probably find that I'm probably going to be pretty correct. But I've spent hours and hours and hours thinking about this, but I've also spent 15 years analyzing how the markets work for 8 to 12 hours a day. You understand? Jimbo says, seems like gray rules this year. How so? Why? Because the yen pairs got strong on the 1st of January or 1st of December instead of the 15th of December? That can't be right. We're splitting the year. We have to throw the year away because the market moved in the direction we predicted 2 weeks early. That can't be. Cash says only Aussie Kiwi interbank at the time. Japan banks, right? Apple News, Twilight Zone loan. Well, big stops hit and all goes. Perfect storm will not happen. No, I'm not saying that will happen every year, but you will be buying the yen every year. But also, some of this stuff I think is misreported from media. Okay, the Apple News, sure, but we already knew there was a slowdown. I think that's more an Apple thing than a macro thing. But everyone's in love with Apple. But you knew the day Steve Jobs died that nothing new or interesting was going to ever come out of Apple again, right? Like Tim Cook is going to come up with the next new thing that no one's ever seen, but suddenly everyone's going to need. That's not Tim Cook. Get out of here. Steve Jobs did all the cool things at Apple. Then Steve Jobs left Apple. Then Apple crashed. Then Steve Jobs came back to Apple. Then it rallied again, went from a bankrupt company to the largest company in the world. And then he died. And it's going to disappear again. They're still selling you iPhones. And did people stop buying iWatches? Like, suddenly they're like, I'm sick of $500 watches where I can't even read it in the sunshine because I'm in the sunshine a lot, right? People stop doing these things. Like, where's the next new thing, Tim? Like, you're just buying an idea that was cool 10 years ago. What kind of laptop do I have? I have a lot of HP stuff now. So I have an HP here. My old machine's an HP. The new machine's an HP. But then I think I have a Dell somewhere. Oh, yeah, here. Is this a Dell? Oh, Acer. I got an Acer here. This is my school laptop. So it's black on black, murdered out. Then I have the two black portables. And then my black mouse, and I look like a hacker. I like to wear my hoodie, my black hoodie, hanging out at the Starbucks. So anyways, so I look at this saying, okay, the market's finally caught up to Apple, and people in China, but people everywhere. They blame China, but they're like, oh, well, maybe people in China can't afford an $800 or $1,000 iPhone. I'm like, nobody can afford a $1,000 iPhone. Nobody wants a $1,000 phone, and that's the problem, right? I'm sorry. So someone said all this news. So I think it's over. Like, is it illiquid? Okay, Asia's less liquid, but again, look at the day, the first full trading day of the year where traders come back. I think people just came back to their desk. I mean, it's not this simple, but there's a lot to this as well. They come back first full trading day. The Asia trading team is first. And they sit down, and here's the money from all the clients, and it says, all right, these ones need to be offset for their tax reasons, right? Just like sort of the beginning crash and then the follow-up crash of December had to do with taking profit on tech stocks and then also taking losses on bad investments. And now we move into January, and then there's other people that also now need to cash out of stock and do their wash sale stuff. And that happens the first week, right? Oops, I lost my chat. So anyways, these professional traders, they come back and they're like, oh, here's the 9,000 trades I need to do now. Boom, 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 boom. Excuse me. And out. Yes, the Asian market's less liquid, but I don't think it's like illiquid. And I don't think the whole world was out of town. Yeah, there was holidays in Japan, but there's other things going on and, so on and so forth. So I'm not disagreeing with any of it, but I think the degree to which, at least I heard on Bloomberg this morning, where they're like, oh, it was this, it was that. I think either they don't understand or they're over-exaggerating the truth. Like, it's not wrong, but it's not 100% correct either. And like nobody saw it coming. You're like, what do you mean nobody saw yen strength coming? Like, it's so obvious that I think it occurred. Like, somebody dropped a bomb on the yen, but it was everybody. And it was for all those reasons, but also because as an FX boot camper, this is what we do every year. And there's lots of people then that come in, they're like, oh my God, that was so unexpected. That's so crazy. Yeah, unexpected every year. Now, the flash part, the crash part, the velocity of it, yes and no. Like, no, I didn't say it was going to drop 6% on this day. No. But what have I been saying over and over and over again? You're going to get lucky when you bet on the trend, and you're going to get unlucky betting against the trend. It's just one of those things. Like, these things happen. I've been doing this a long time. Dude, that used to happen like every other day. If you went back to 2005, 2006, 2007, I think it was 2007, for example, where we were making like 1,000 pips a day on the pound yen alone. So like this 600 pip move on Aussie, you're like, yeah, it's unusual for the last several years, but dude, these things happen. I mean, they happen. I'm not trying to say like, I predicted this happened because I said it was going to. Okay, I'm not saying that. But I'm also telling you, just don't tell yourself you can't predict that. This was unusual. It was a perfect storm. Some unusual thing happened. You can't plan on it. You couldn't have been in it, and it'll never happen again, so totally discount it. That, I think, is more wrong. Because you know what? I'm going to do it again next year. Boom. Okay? So that's all. Does that make sense? So there's extremes. One side with the media's reporting that makes it seem a flash crash, an anomaly in the price time continuum. And then there's seasonality stuff. And then there's sort of both kind of got together. And that can happen, but it's not unusual. Hurricanes, when it comes over your village and wipes every house off the sidewalk, you're like, wow, that was unusual. This must be the end of the world. Yet, there's hurricanes all the time. And there's even a hurricane season. So you're like, yeah, well, you're in the middle of hurricane season and you live in the Caribbean. Yeah, well, my village hasn't been hit in 50 years. Yeah, well, these things happen. You live in the Caribbean. You're going to get hit by a hurricane eventually, right? It happens. And it's even predictable when it's likely to happen. So, like, do you guys study particle physics? Yeah, I do a lot of stuff on my free time. I don't know if this is going to make sense. Okay. There's a game some of you guys probably know where you take a nail. Oops. I'm trying to get nail. These are nails. I couldn't do a drop. I wouldn't do it. Okay. And you put hundreds of nails like this, right? And then you get slot. Okay, particle physics. Do you know this game where you drop a ring here and it goes bump, 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 and lands in one of these slots? No, Brooke. Okay. Oh, Ross studies particle physics. Okay, cool. Plinko. Okay, cool. So every time you hit one of these pegs, it's random and it's going to go bunk, 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 and land in one of these slots. And in particle physics or quantum physics or whatever you're studying, like this, maybe you're studying quarks or something. Is it going to be here? Is it going to be there? Well, it all comes down to probabilities. You can't actually know, like when you're doing, when you're studying quarks, quarks here, where's it going to be next? Here, or here, right? You don't know, so you look at, well, the probability is pretty good here and very minimal over here and all that kind of stuff. But it can appear wherever. And there's only levels of estimation, right? Oh, I know who he is, Brooke. Okay. All right. So where is this going to land when I let this go? Is it going to land in 1, 2, 3, 4, or 5? Or 6 or 7? The answer is you don't really know, right? And so another person comes up and you drop it. Where is it going to land? Well, it's just as random, right? And you have no idea where it's going to land. 1, 2, 3, 4, 5, 6, or 7. But you know when you look at it as an aggregate, you know exactly what's going to happen. You know what's going to happen? As an aggregate, it's going to form a shape like this. Okay? It's going to form a shape like that in the aggregate. A bell curve is another way of looking at it, right? And you can do this a million times and it'll form the same shape. But you never know which one, right? So it's all about the aggregate of the data. So you could say like this 1 year, that flash crash of yens. But if you look over the last 20 years, or let's say the years I've been trading, if you go back over the last 15 years and look at January, which is not hard work, how many people on planet Earth do you think are capable of doing that? Pretty much everybody. You could have done this a year ago or 2 years ago or 10 years ago, right? Just look at what happens. And you might say, holy shit, that freaking thing falls every freaking year. Pardon my freaking language, right? You're like, oh, on aggregate, like we don't know the exact day or the exact time or if it's or the velocity into which it is going to, right? But you could study it like yen falling, or let's say yen strength in this case, right? Yen up. and you get the results over the years, and you get the dots, dot, 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 dot. And these are all the different years. And what we're studying is the yen pairs fell 300 pips over the course of 90 days, 800 pips, 1,600 pips or more, right? And you'll see, I guess this should have been 4, right? Sorry. And most of them are in here, lots and lots of stuff in here. But then there's some fat tails too, right? And some years, but not most, you get huge moves. And some years they're less. But you might just find between December 1st and February 1st, these freaking yen pairs, the yen strengthens this much against them. And so you don't know each individual year is going to be slightly different from previous years. But what you're doing is you're ignoring the fact, and this is what I'm trying to tell you, don't count this year as something unusual that will never happen again, because this year was a flash crash. I think the media is making too much of it. I think yes, it moved a lot this year. It's a fat tail to the right. But don't walk away like this ain't going to happen again, because you're doing yourself a disservice, okay? What will you say if you go if the yen pairs go up for the next 3 weeks? Well, I'm expecting a recovery, Jimbo. Typically, it happens in the 3rd week, but let's say it happens in the 2nd week. How wrong would I be? Bear in mind, I told you the 3rd week of January a year ago. So in the course of 52 weeks, what if I'm off a week, like I was in December? The yens did gain strength, but they gained strength at the beginning of December, not the middle. So I'm a couple of weeks off, but I told you a year in advance. So in 52 years of preparation, it moved 2 weeks. So I'm off 2 weeks out of 52. I think statistically that's pretty okay, isn't it? That's 2 over 52, isn't it? So what if I'm 1 over 52 this time? Will you heckle me and say I'm wrong? Will you heckle me and tell me I'm backfilling just to look smart? I'm 1 week over 52 weeks ago. I told you the 3rd week. So if it moved the 2nd week, I'm within 2% accurate. So I throw it back to you. How will you feel? Okay. I also think it's a false rally, Jimbo. So in years past, remember, I'm not predicting anything. I'm trying to tell you in years past. In years past, we get a downward move in December for tax reasons, and another one in January for tax reasons. And then there's typically a rally in like the 3rd week of January that leads to something like this. And then we kind of move sideways, but a big sideways, not a little sideways. And then until summer, and then it gets to be a little sideways, and then we break in the direction of macroeconomics. Okay? No, I know. So that's what I'm trying to reiterate what I think is likely to happen based on my 15 years of experience, because a lot of you have not been here for 15 years, right? So I'm trying to share what I've seen and explain, like, just because I've seen that doesn't mean it's going to happen, but just be prepared, like, for crying out loud, right? Like, if you were selling Japanese yen in the 1st week of January, you've ignored everything I've been saying. Not just for like weeks or months or all year. You've ignored everything I've been saying for pretty much 15 years. If you were long Aussie yen, you ignored what I've been saying for 15 years. I can't do anything about that. Okay? Right? So if it moved up now, Jimbo, it's very possible that we knocked out a whole bunch of stops, right? We might have picked up some buy orders, right? And then in that case, what I'm going to say, Jimbo, is we knocked all those orders out. We executed them. And then we're going to, in that case, fulfill the general methodology of hitting, let me get rid of this, of hitting our target early in the month and returning to the central pivot. And that's your typical mechanical, technical analysis response to this. Okay? But remember, it's not calculating seasonality and stuff, is it? So I'm trying to add fundamental seasonality to our technical analysis. Okay? So if it wants to fall, I've seen it fall beyond non-farm payrolls in January. And we typically pick it up. Remember, there's a holiday in the third week. There's a Fed meeting out there somewhere. And there's something around the third week. Maybe it's the fourth week. Maybe it's the second week. But there's something out there in the seasonality of, or the fundamentals of our market, the market we call Forex, that typically can produce a short-lived rally in the sort of third half of January. Yeah, well, Angel, a lot of people hate that because they expect to come to a YouTube video or channel and have me make money for them. Like I'm their dad. Daddy, make a decision for me and give me my money because I'm entitled to it. I'm gonna get chubby, grow a big beard, have a short haircut, and work in a microbrew. And meanwhile, you're going to make foreign exchange trades for me and make me rich for me. I've never bought into that. I've never bought into that. So, I just say millennial. It's easier to say than entitled slob. Yeah, I just say millennial. So anyways, I've never seen that as my job. But I hope, like, what I'm sharing, and I'm going back and forth with Jimbo, and Jimbo asks good questions, and Jimbo is a supporter of the group, but he's also a realist, I think. Jimbo is, like, very open-minded, but skeptical at the same time, which I think is really important when you're a trader, because you have to see reality. Like, I try to teach you not to believe your own nonsense, right? Like, you have to have a theory, but then you have to use scientific methodology to confirm or deny the theory. And that's why, like, going back to Brooke, I think it was, where I wasn't sure. I don't know Brooke. I don't know Brooke's trading and all that kind of stuff. But I've been in situations where you're making money hand over fist because you're long yen pairs, and then the yen pairs come down, and you keep doing the same thing that made you money, but the market's changed. And so all of a sudden you have all this money, and you're already thinking about the yellow Lamborghini you're going to buy, and then, oh, well, you gave some back. Oh, that's the cost of doing business. And, oh, well, the 382 didn't hold, so I'll buy the 618. And, oh, well, now it's a double bottom. And then all of a sudden you're buying low and dips and lower lows. And not only do you not have your money anymore, now you've lost money. And that can happen because you keep talking yourself into doing the thing that was working for you in the past. The trick with being a trader is to confirm and deny your hypotheses, not just be stubborn. There's a difference between discipline and stubbornness, right? And it's not an easy thing. I'm not trying to say that. I'm saying it's the most difficult thing. And so that's why I gave the example when I was a bull on oil. I can give you 9 different reasons why I thought oil was going to go up at even $60 a barrel and then $50 a barrel. Shoot, now we're at 44, right? I still have the same 9 reasons why it should go up, but why did I walk away at 55 or 60, whatever it was way up there? Why did I walk away? Because I'm trying to show you that I'm denying my hypotheses. I'm not confirming it. I'm saying, whoa. Okay? And there's an important lesson to that, okay? That maybe didn't make you money this year, maybe won't make you money next year. If you're around 10 years from now, you will have an aha moment and you'll say, oh, I see what he was saying. Oh, I get it now. And you'll say, whew. That's a very important lesson. But you might not see it now. But I hope you're trading 5, 6, 7, 8, 9, 10 years from now, right? And you'll have the aha moment. Okay? From October to November? No. Depending. So like, Roger, if there's a cold winter in the United States, northeast, so like Boston, just track Boston, for example. Boston, New York City, that corridor. If that gets dumped on with snow, or if it's just frigid, freezing cold weather, minus 30 Celsius, minus 20 Celsius, oil will go up, actually. Yeah, well, right on AMFX. So I hope you guys see that I do want you to succeed. I do want you to survive. I'm trying to teach you how to trade, but I'm also trying to teach you how to think about trading, how to think about your trading as a business. You know, very often we talk about, like, how would you discuss something with a client, with a potential investor. I just spend a lot of time with that because I think some of you really want that and need it, right? And then other situations we're talking about, well, risk management and, you know, and how powerful sort of a long-term vision toward your trading is. And then I'm trying to teach you things that maybe you don't hear anywhere else, like seasonality. I really don't know what other people do. So maybe lots of people talk about seasonality now. But I don't know. I don't go to other people's webinars. I've never seen anyone else trade. I've never really read anyone else's book. I mean, I don't know what other people do. So everything I've learned is through observation and then really serious, studious thought. Right? I learned the hard way, but I honestly believe it's the right way. Now, there's many other ways, and that's cool too. But this is, I'm trying to boil it down to common sense. And I'm trying to teach you common sense so that you can do this on your own, take care of your loved ones and your family and all that kind of stuff. And that's so much better than just, showing you another 5-8 cross down, right? Is that right, Cash? Yeah. Cool. So anyways, I went way too long again. I think we went for, oh, look at that, 2 hours and 15 minutes. I'm sorry, guys. But thank you for subscribing, and thank you for being a subscriber. Thank you for the good questions and the back and forth. And this is a good time of the day, I think. I like hanging with you guys, so I appreciate you and the loyalty and respect. Jimbo says, warmer than average winter thus far due to the jet stream winds. Yeah, therefore oil would fall because of lack of demand for heating oil. Yeah. So thank you, guys. Really, seriously, thank you. Right? Peace on earth. May the pips be with you. May your profits be above average. All that kind of stuff. And I'll see you tomorrow. Well, make sure you leave comments and stuff. Can you guys leave a lot of comments? Can there be like 100 comments on the video today? Just a hello. And then the swing trading group starts tomorrow, but the actual webinar is going to be Sunday at 5 p.m. because I got non-farm payrolls tomorrow. So Sunday at 5 p.m. is where we're going to meet and set up trades for the week and probably even the month. So make sure you visit fxbootcamp.com and join there too if you're going to be a part of that group. All right. Cheers, guys.